Well, let's get across the market open now, and joining us is Josh Barker from Barker Wealth. Josh, good to see you on this Friday. So we've got more news from the White House. Donald Trump, pretty emphatic that he's actually come up with a deal with Iran. Iran hasn't agreed to that as such. They said, no, we haven't signed on the dotted line. Yet you look at the market response, very positive.
Yeah, well, it does seem like it's Iran's terms that's been put forward, and then Trump's agreed to it, so they haven't sort of counter-agreed. So it seems like it's as close as it's ever been. Obviously in these sort of situations, things can change in a heartbeat, but I really don't think it's impacting the S&P on its sort of lesser short-term daily movements as much as what the rest of the economy is really just powering that on. Like a 1.75% boost last night. It's really just been holding ground, and it's just continuing to push on to highs again. So, yeah, I don't think we'll see too much downside from that news if it does reverse. But I think, the US is just continuing on its strong course.
Yeah, I mean, you take a look at the latest inflation rates out of the States, they're pretty punchy.
Yeah, they've got a little bit of room either way, and even here in Australia, economists have been going back and forth about whether the next move is up or down. So it's really just sort of flatlined at the moment. There's expectations both ways, but I think the US is just likely to sort of hold rates flat for the next 12 months is probably the most likely scenario. Who knows what we're going to do here in Australia, to be fair.
So, Josh, when you look at the broader market there, obviously, given Wall Street has rallied to record after record, just in the past week or so, of course, that has come off with questions now being asked as to whether now is the time to take some profits. Maybe we'll see a significant leg down. Do you think that's likely to be the case, particularly if they get this deal across the line?
Well, I think if the market hasn't gone down with all this going on, there's not a catalyst that's foreseeable in the near future that's going to push it down. The only potential risk is AI valuations, but we're seeing those companies come to market at those really high valuations, being justified as in demanded by the market. So I don't see that thematic breaking anytime soon.
Now, speaking of companies coming to market with high valuations, SpaceX, it is something to behold, isn't it? And every man and his dog clearly wants to get on that rocket ship.
Yeah.
What are your observations?
It's a really interesting one. Obviously, the reason typically IPOs come to market is to capitalise on a high valuation, and we've definitely seen that. I think it's more of in terms of taking up the IPO, it's one of those situations where you almost just leave that to the Americans. There's not many like Australian sort of capital networks that are actually doing the SpaceX IPO. It's really just CommSec that are distributing it to retail investors.
Well, they've hit a record, some 30,000 subscribed?
Yeah, it is because they're the only ones doing it.
Yep.
So there's no large, firms in Australia advisory that are actually, getting direct access to the IPO through the normal networks that typically happen on an IPO. It's a little bit of a logistical nightmare, is my understanding of it, being US and everyone having to, have an international account in order to do that. CommSec believes they've got the capabilities, but yeah, they've been inundated, as I guess has been reported.
So obviously that comes ahead of other IPOs expected to OpenAI and also Anthropic.
Yeah.
So there's certainly a lot, and that's going to suck at liquidity too in the American market, isn't it? Yeah.
Well, I think those companies in particular are well positioned, to benefit from this. They are the genuine leaders in the area. There's only about 4, and three of them are listing this year. So it's a really strong part of the market, and I think it's one that isn't going to go away anytime soon. Very hard to get your hands on, but at the end of the day, these companies are going to list on the market. They're going to be tradable. They're going to need to stand on their own two legs with reports coming out, and the market will be able to really price that in. So for mine, I'd be, particularly on the SpaceX one, just a little bit cautious in jumping into that until you see a few quarterly reports come through and the market reacts positively to that, and it stand on its own legs once it's on the market.
Meanwhile, we do have IPOs in the local market as well, albeit a little smaller, nonetheless.
Very different size. But,
well, we had one during the week, so Boresight. So this is in the defence drone space.
Yeah.
And that bounced higher on debut.
It's a really strong performance, which is positive to see from the IPO market here in Australia. We haven't seen much, so this seems like a really good quality business. It's backed by Regal Partners from the early days, but listed at 20 cents just the other day, and it's already raced on to 54 at the close yesterday. So with that military application, obviously they're pinning on the actual recurring revenues coming through quite strongly, trading at about a 50 mil market cap. But it just goes to show, sometimes you don't need to look at the most popular IPOs coming out in order to make a really good return.
And well, elsewhere I see you've got a AI Private Opportunities Trust that Pengana has brought to market too. I gather you've taken a good look at that. Yeah,
this one's really interesting. It's, we've seen it a lot over the last 12 months is the capital market shift to listing trusts and companies, LICs or LITs. And this is a similar one. There's been a lot of credit funds listing just to, really capitalise on that market. But this is something a little bit different. It's actually a private equity fund. There's a couple of private equity funds that are listed on the market. However, this one is structured like a traditional private equity fund in the way that it's going to essentially look to distribute its entire value of the fund over the next 7 years. So the fund won't take any fees after 7 years, so it's listing it at $10. And put really simply, just for example's sake, in that 7 years, it'll probably distribute maybe $20 worth of distributions, and then the entity will be closed. So it's a really interesting one. They're obviously targeting the AI thematic. So I know they were looking to get on to things like SpaceX in its late stage private markets before it went IPO. It's obviously a bit of a timing issue there, but its main targets are going to be the ChatGPT and Claude parent companies. It already has the parent company of TikTok in its portfolio, ByteDance. So the actual fund itself is managed by GCM Grosvenor, which have about 100 billion under management. So they're well positioned in the market to get access to that sort of stuff. It's really hard to get access to those sort of companies when they are private. They're also going to focus on the entire AI ecosystem, so it's not just those 2-3 companies that they're targeting, but those will be larger components of the portfolio. So it's a really interesting one. I mean, my criticism on the ASX over the last 6 to 12 months has been that you can't get AI exposure the same way that the US has.
Well, other than data centers, I guess.
Which the performance has been, lagging as well because it's so capex intensive. But this is a good way for Aussie retail investors to get access to, these really rare and exclusive deals that are being done in the US through a liquid entity. So it's something that wealth advisors have access to a lot, but it's not something that they can necessarily offer out to the broader public. They're usually wholesale sophisticated only funds, typically US domiciled as well. So where Pengana are coming in is creating that opportunity to a US based fund as well. So I think it's a really good opportunity for those to look beyond typical equity exposure anyway.